So when Anheuser-Busch InBev, the largest brewery in the world, decided to spin off its Asia business, the result was a multi-billion IPO on the Hong Kong exchange, where we see Budweiser Brewing Company (APAC) raise about $5 billion in proceeds back in 2019. And today, this Asian subsidiary of Anheuser-Busch is worth around 300 billion Hong Kong dollars and is considered the largest brewery in the APAC region. However, is bigger really better in this case? So today, we look at what you need to know about Budweiser Brewing Company. Well, Budweiser Brewing Company APAC has around 48 breweries across Asia Pacific, and majority of them are located within China. And like most breweries, they sell mainly through the distributors and retailers that they have. According to the company, they have relationship with more than 6,000 distributors across Asia. And Budweiser APAC accounts China and South Korea as their core market, but sees India and Vietnam as their core key growth market as well. However, Budweiser Brewing Company APAC has a rather complicated relationship with its parent company, AB InBev. Basically, it controls and owns local brands like Harbin in China or Cass in South Korea. But for all the international brands within AB InBev portfolio like Budweiser, Stella, and even Corona and Whole Garden, Budweiser APAC has to license this brand from AB InBev. And in total, close to half of its sales are coming from brands within AB InBev portfolio. And from these international brands, Budweiser APAC has to pay its parent company a licensing fee, sometimes based on royalty or a cost-plus basis. And on top of that, they have to share in the marketing costs with AB InBev for their global campaign as well. So interestingly, even after the IPO, AB InBev still owns around 90% of the company. This means that Budweiser APAC is just an operating subsidiary of AB InBev. But before we look into the business model of Budweiser APAC, if you'd like to follow the financial data or news of Budweiser or its parent company AB InBev, you can always check out our sponsor Seeking Alpha. Seeking Alpha is right now the largest investment community around the world, and it provides investors with a wealth of information through their financial data, news, earning transcript, and also crowdsourced analysis. Personally, I find it extremely useful to use Seeking Alpha to keep up to date with the company that I'm interested in. And right now, you can sign up for Seeking Alpha with a more than 50% discount from their premium membership. And if you would like to find out more, remember to check on the link on our show notes below. Now, let's check out Budweiser APAC. So although the company operates in more than 30 countries and territories, here are its key markets. Number one, China. Budweiser Brewing Company is quite secretive about its business. Its annual report does not really disclose too much information outside of what is required, but luckily its IPO prospectus shares some great insight into its business. For example, it shows that APAC is now the largest beer market by volume around the world. And in just 2018, APAC contributed about 37% of the entire beer volume in the world. And in particular, China takes up 25% of the global beer market. And Budweiser APAC is the third largest player within China, taking up about 16% of the market by volume. But according to the company, if we deem it in terms of revenue, it is in fact the largest player in the market. And this is due to its larger portion of premium beers within its portfolio. So apart from its local brand, Harbin, it also distributes premium brands within the AB InBev portfolio. Its other two competitors are also listed on the Hong Kong Stock Exchange, with number one, China Resource Beer Holdings, which own the Snow brand, and also Qingdao Brewery, which owns, of course, the Qingdao brand. China Resource Beer Holdings was actually a joint venture between China Resource Group and SAB Millers. However, after the merger between Anheuser-Busch and SAB Millers to form the current AB InBev, China Resource has brought back the entire shares of China Resource Beer. Therefore, AB InBev now end up having to compete with its previous JV company. Since then, China Resource Beer has entered into partnership with Heineken Group instead and started producing and import premium beer brands from the Heineken Group. And for the China market, Budweiser is really betting on premium beer being the key growth factor. As China consumers are growing more affluent, the demand for premium beer should continue to increase. But unfortunately, up to now, because of the pandemic, that prediction has not really come true. But another key market for the company is South Korea. South Korea has been traditionally more of a spirit market in terms of its local soju. However, beer consumption has also been growing over the years, and this is mainly driven by premium beer market in South Korea. What is interesting though is that the company has a clear leadership in South Korea with close to 60% market share within the country. And this is mainly coming from its local brand Cass. Next, the company also counts India as a growth market for them. Although the beer market is growing quite fast in India, it is still a relatively small market, given that the population is also traditionally in the spirit market. And you can really see that from the volume of spirit being consumed in India, which is much more than beer itself. And that's a huge difference given that alcoholic concentration of spirit, normally around 45% to beer around 5%. And in the IPO prospectus, we can work out the per capita consumption of beer in India is only around 2 liters per year. Comparing that to China, which has a per capita consumption of 35 liters per year, and the US with 70 liters a year, we can see why Budweiser APAC sees India as a huge growth market for it. And according to the company, Budweiser APAC is a distant second market leader in the country. It competes with their leader United Brewery, which owns the Kingfisher brand. And it also counts Carlsberg as a key competitor as well. Carlsberg in particular has been gaining market share very aggressively over the past few years. And lastly, one last growth market for the company is Vietnam. Vietnam beer market is expected to grow quite strongly over the next few years. And unlike India, Vietnam is predominantly a beer market with a per capita consumption of around 50 liters per year, which is even higher than China. Unfortunately, the issue is that the company right now has less than 1% market share within Vietnam. And the Vietnam market is still dominated by its local producer. So now that we know its business, we have to think about why does Budweiser APAC need to be listed in the first place? And this might be confusing because AB InBev has spin off Budweiser APAC in the first place, but even after listing, AB InBev will still control around 90% of the company. This means that Budweiser APAC is really just continuing to operate as a subsidiary. But one key reason why is because AB InBev is in a huge debt situation. The company has taken on a huge amount of debt, more than $100 billion after years of mergers and acquisition to form the largest brewery in the world. So the proceeds from the listing could really help to bring down the overall debt level for the group. Right now, there are some things that I like with this company and some things that I dislike. And one of the things that I really like about Budweiser APAC is that although their parent company is in a huge debt position, Budweiser APAC is actually operating in a net cash position. On top of that, it is a very simple business, just importing or producing beer and then selling it throughout Asia. And traditionally, brewery tends to have a very strong free cash flow business model as well, by producing something that is relatively cheap, mainly water, and then selling them off at a high margin. So Budweiser APAC really have a strong net margin of around 15%, which is pretty good. And another point that I like is that unlike its key competitors like Qingdao or China Resource Beer, Budweiser has a more diversified revenue base. And it is well positioned in its core market and has a huge portfolio of brands where it can take advantage of, from mass market brands to premium brands. So it should be able to capture the entire value chain. But there are also some things that I dislike about the company. The main issue is, of course, valuation. Even after a full year of market downturn, this company is still trading at a price to earning of 34 times. At today's depressed market, that seems like an excessive price to pay for a slow-growing dividend stock. But anyway, what is your thought on the company? Share with us below. If you have gotten value from this video, I hope you give us a like and also share it with a friend who you might think will benefit from it as well. And of course, please check out our sponsor Seeking Alpha on how they can help you in your investing journey. You can always support our channel by supporting them. So remember to click on the link below to enjoy more than a 50% discount on their membership. Anyway, as always, my name is Stanley. Till we meet again, investing.